Hello everyone, welcome to the Ichimoku charts.com daily analysis for gold for Monday, April 15, 2013. Well, very bearish day today, and the candle that we're analysing is the second last candle on the chart here. The last candle is still currently developing, and that's developing or continuing to develop in a very bearish manner. But this candle here is a very large black body candle. We've seen a nice extension of the size of that black body. We've seen an extension of the range. That's the distance between the high and the low, suggesting that the sellers are very, very eager in this market, and that the sellers have maintained some and increased some very strong downside momentum. The sellers have made a very substantial amount of net bearish progress. There is some doubt about whether they can maintain that momentum. And the way that this current candle is developing, it is small, and if we do see a smallish black body for the close of tomorrow's trading, then it could suggest that the sellers are beginning to lose some momentum. Now, we do have solid support down around here from 1329 extending down to 1309 and then to the round number 1300. I suggest that we could see the market find some solid support around these areas. There is another level down below there at 1265 and that at 1266, and that could come into play. But here we see a very bearish market with the breakout down below that highlighted zone that has been very important in the past, totally negated. When we saw that strong bearish breakout, it did suggest that the sellers had such strong control that there was a very good likelihood that they would sell this market off substantially. Now, in terms of the Fibonacci extension, and we're examining the relationship of the first time frame downtrend to the previous time the market was trending down in the first time frame, and here we've seen the market test through the 161.8%, through the 261.8%. The next level that may come into play is the 423.6%. This really does tell us how strong this market is to the downside, how much of a very strong bearish market we do have trading through those levels and in such a bearish manner. I suggest that we do watch the market down around that 1263 if we do trade down the rand there, and look for some buying to come in and look for a potential change of trend to the upside. In terms of the Fibonacci Retracement, this really highlights even more how strong this market is in terms of the sellers, and a strong bearish close below the 161.8% for today's trading through the 261.8% and the 423.6%. And the next level that we come into play, which is quite rare, or potentially into play, which is very rare for markets to trade down to these levels, is the 685.4% down at 1242. So at least we do have some targets based on these techniques, and if we do see the market trade down to there, then let's watch how the market reacts. But I really do doubt that we are going to trade down to there for tomorrow's trading. In terms of Ichimoku, obviously a bearish market in all three time frames. We had a breakout some time ago giving us a bearish signal. It was a great signal. And we also have the market trading down below the Kijun Sen and the Tenkan Sen. A bearish signal here when the market traded back down through the Kijun Sen. We did have the barrier of that strong support, but certainly we would have felt much more confident when we saw this strong bearish breakout down below that highlighted yellow zone, and the market really has gone on with this. If we look at the angle of the Kijun Sen and Tenkan Sen, they're pointing down very, very sharply, and that's reflecting this solid downside momentum that we've seen in the first time frame and the second time frame. So very, very strongly bearish market in all three time frames, and the Chica span here is a long way down below the corresponding price action, so it's confirming this strong bearish sentiment that we're seeing in the market in all three time frames. Only problem here now is that this market's done so much work in the last few days that it's unlikely to be sustained down around these levels. It is looking overextended. We are trading a long way away from the cloud now, and markets act like rubber bands. The cloud and the Ichimoku indicators represent equilibrium in their various time frames, and the markets will move away from them in a disequilibrium move, and then move back towards them to find support near them. So it's likely that this market will potentially bounce. If this market does bounce, then we do have resistance at 1380 and then at the round number 1400. But the area around the Kijun Sen and Tenkan Sen will be very, very strong resistance to this market, but I doubt that the market will bounce that far over a day or two, but there is a possibility of that happening. But the story here really is about sellers. They are still in control. They are still very strongly committed. The trend is down in all three time frames. I suggest that the 1300 round number level here is crucial. If we do see buying coming in around there, there is potential for this market to trade up and retrace significantly into this first time frame downtrend, but we can't preempt the market at the moment. The sellers still have control of this market.